I'm going to show you right now my 5 favorite wheel strategy stocks that I'm paying attention to this week that are setting up beautifully to collect some of that juicy premium. And if you comment down below on today's video, I'm going to give you my ebook on how I build out my option selling watch list. Perfect for those of you just getting into option selling or are already veterans. Just drop a comment, no string is attached. I'll personally respond to you with that ebook. And while you're down there, hit that like button and that subscribe button. And of course, guys, I hope you are having a God-blessed day. So guys, let's get into it right away. First and foremost, we're going to talk about American Airlines. I brought this one up yesterday already. I do have $12 puts here already that are expiring on October 17th, so about 10 days away. So my plan right now is I freed up some capital from selling my Snapchat covered calls that gave me around $800 or so to be able to now deploy. And I have enough to do some puts on American Airlines. Now we are, at close, we closed a little green here right now. We kind of bounced off that bottom Bollinger Band area. So I'm waiting for a slight little pullback. If I'm not able to get the pullback, I'm not going to stress it. Because again, I already have my $12 puts in on American Airlines here, right? But I want to be able to kind of dollar cost average down. So for me, I'm going to primarily looking hopefully at the 11s. I may be a little less risky and go even for the 1050s. I'm not really worried about it because right now American Airlines is paying insane premium. So I don't mind. I don't need to hit like a 3.36 ROI on collateral like I did on American Airlines here. I'm perfectly fine getting a trade in that's like 2.5% ROI. That's why, again, I'm most likely going to do like the 1050s or something that's going to get me in that range. Next one I'm paying attention to, we're going to quickly gloss over, is SoFi. Brought this one up yesterday as well. Why am I paying attention to this one? Well, guys, we have not seen in quite a while, if I just even go over 6 months, we have not seen SoFi cross below this middle Bollinger Band area, okay? So what does that mean? Well, no one really knows, but in reality, I'm looking for this to continue to work its way down towards its bottom Bollinger Band. If I'm going to do puts on this, I'm looking at 200-day moving average stuff. 17s, maybe 16s. We'll see how much of a pullback that we continue to get here from SoFi. But I'm hoping that we do. I think it's been riding high a little too long. Oh, you already know I am team SoFi. I love SoFi for all my finances and all that stuff, right? But with that said, the things have been on a rocket ship right now, and we got to come back down to reality. And that is how the option selling way is, guys, I believe, right? We are paid to be patient. I was patient on this. Obviously, I did trades, did some rolls, and eventually sold my SoFi shares here on the public log. And if you want this trade log, click the first link in the description of today's video. But with that said, right, I am going to watch this. If this continues to drop, I'm going to be in it. I'm going to be in it. Again, I want to be around the puts, around the $17 level. Next one, Pfizer. Just mooning this past week, just absolutely mooning. So real quick, what am I doing? Covered calls. That's the play for me, at least with Pfizer. This is on my one of my favorite wheel strategy stocks. Say, politics aside with Pfizer, but with that said, this stock has been good to me over the years, and now I'm just going to reap the rewards of the covered calls. But this thing has been bouncing around here this past year. So for me, looking at covered calls, I think this is going to come back down to its bottom Bollinger Band area, obviously. But with that said, I'm going to take advantage of it while I can, as well as it being above its 200- and 300-day moving averages. The way I like to look at those 200- and 300-day moving averages, guys, is I kind of keep things simple for myself here. I'm going to be honest with you, right? When I'm selling my puts, depending on the stock, this is a very broad statement. I'm going to say I like to be around those 200- and 300-day moving averages if I can, right? That allows me to kind of, get a better price than what the past 200-300 days of people have been investing in. I know that's not necessarily the technical definition, but I usually like to do that, right? They're very key indicators, at least for me, and when I'm making these investments, especially for cash secured puts, I like to be below that. And when we are shooting above it, especially over the top Bollinger Band area, I'm going to be selling covered calls on it, right? Because again, if we look at the Bollinger Bands, typically we stay within that range. Now, obviously, we do shoot out of it. We shoot below it sometimes, but usually we kind of come back into that range. Now, obviously, this giant spike up on Pfizer is going to skew the data here for the Bollinger Bands, but still, the rules apply for me, right? I treat this like a business. Get out a higher than my cost basis, not a problem. Listen, somebody asked me the other day, Pete, how do you handle like rolling, kicking that can down the road, so to speak, with the covered calls, not triggering a taxable event? I get all that. For me, if I'm very bullish on the stock, I'll keep kicking the can down the road and then, eventually lock in that appreciation. There's nothing wrong with that. That could have been totally been an option for me here on SoFi. But I always go back to the end of the day as me. I treat this, my option selling, as not a buy and hold. It is not a buy and hold. It is a business, and the purpose of the business is to turn a profit and continue to reinvest in the business to continue to grow it. So even if I create a taxable event, I'm not stressing out about it. Listen, at the end of the day, you're either going to pay taxes now or you're going to be paying taxes later. There's the reality we live in, right, guys? So for me, I treat this like a business, and it has served me very well, okay? And that's the way that I like to look at option selling, okay? So obviously Pfizer covered calls here, and then Kenvue. So Kenvue's interesting. You guys know I'm not typically into these like stocks where there's like a ton of news around it, but I have been watching Kenvue here for the past week, and it seems like we are getting some support here in this like mid 15 level. What am I going to be looking at? 13 puts. If there's any juice there, maybe 14 puts. Nothing too crazy, real super close to the money stuff, but I do believe in this company. They obviously own a lot of brands, obviously a lot of kind of news around them right now, which I do think they're just getting absolutely slaughtered. Well below the 200 and 300-day moving averages of around $22. Great setup, bottom Bollinger Band, premiums are juiced up. I don't think assignment's going to necessarily happen in that 13 range. Again, I feel like there's going to be some good support here at that 15, mid 15s level. So I'm going to be looking for some cash secured puts on this, especially for the smaller portfolio and smaller sizing stuff. Right now, guys, I'm not going to lie to you. I'm a little nervous with everything going on in the world, right? Everything's a headline away, as you guys know. I'm sizing smaller right now. I'm preparing the dry powder, so to speak, for a bigger market pullback that I do believe is coming soon. That's just me personally. So right now I'm kind of sizing small, trying to stay as diversified as I can across the board. Next up I'm watching is Kimberly-Clark. Again, right now I'm going back to my old reliables right now. I'm looking at things that are under the 200 and 300-day moving averages that are working towards their bottom Bollinger Bands. That's where I'm going to be able to get in some great premiums. I'm going to get a great strike prices. And yes, they are boring companies. They are boring stocks. But for me right now, I'm not selling puts on like Nvidia and stuff, especially if for me, I believe a greater market pullback is going to happen. I think the market is extremely overvalued. So for me, what I believe doesn't mean what you have to believe. You go do your own research. I literally have no idea what I'm talking about. For me, I'm sticking to like the old reliable stocks that me personally believe will be around for 10 plus years. And like, for example, like Kimberly-Clark, great dividend. Even if I get assignment around like that 119, 120 level, I don't really care. Look how far below my 200 and 300-day moving averages. I believe we'll get back to those levels, especially with Kimberly-Clark. So it's kind of like slim pickings, so to speak, since the market's just been on absolute tear. So guys, those are the stocks that I'm watching for the wheel strategy. If you want my full trade log that you can copy for yourself, make sure to click the first link in the description of today's video. Not only are you going to get the trade log for attending a call to learn more about our mastermind and mentorship program, you're going to learn about the Ark Options Strategy, which gives you 5 sources of wealth building and premium generation that I primarily am going to use as my retirement income. You're going to learn all about that in the first link of the description, in the description of today's video, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.